stay on, let me also bring on board Peter McGuire, who is the CEO of Exim Australia, to discuss the metal space in greater details. Good morning, Peter. Good to have you on the show. Speaking to you about Tata Steel's performance, it's pretty weakish. In fact, it has reported a surprise loss in the third quarter vis-a-vis expectations of a profit. Now, European operations have been weak on fears of recession and demand slowdown. We've already seen a sharp fall in global steel prices. My question to you is, how long do you expect the weakness to continue? In fact, do you expect demand to now improve and steel prices to pick up, especially after the China reopening?
Well, good morning. Yeah, a couple of things on those questions. I think first off, we've got to be considerate where we were this time last year and how 22 played out. And then moving through, we've just come out of Lunar New Year, that quiet time as far as January consumption for the Chinese. So I'm expecting some increase as far as demand over this quarter, leading from really the start of February onwards for China. And I think that will engage a great portion of the world, and we've had a nice move to the upside for some of those base metals like copper and nickel and zinc and aluminium. They've given back a little bit of that profit in the last week or so, but I think that will just giving up a bit of the hot air, and it will increase as far as price and opportunity for traders, I think, over this next quarter, higher pricing.
Right, Peter, what's your take on Indian steel, given the fact that the government has announced a 33% jump in capex for the next financial year?
Well, I think overall you would have to think that India will, and especially companies like Tata, will perform, I think, quite well from an infrastructure side, from demand internally and exports. And so I think it's favourable. And where that moves from here will be, I think, a consolidation phase. We've seen as far as the last 3 to 4 months, and I'm really expecting some good signs leading through the next, say, 6 months for consumption across all of Asia and primarily India and naturally China.
Well, expect a pickup in consumption over the next 6 months. That's the call from Peter. Peter, reports are suggesting that the US may slap 200% tariff on Russian aluminium imports, yes, right? As it looks to blunt Russia's role as a global commodity powerhouse. Now, if that happens, how do you see it impacting aluminium prices?
Well, they've got to be very careful, because I'm conscious as far as Mr. Modi and Mr. Putin and the Saudis, how they're playing against the petrodollar and what their mechanism is going to be as far as payment in other currencies. So if they come with a heavy hand, which they will do as far as aluminium, for Mr. Putin's aluminium and Russia, then I think that could cause some concerns as far as payment. And they may look to be paid in ruble or changing the mechanism for payment. And I don't think that Russia, considering its powerhouse, is going to take a backward seat on this. I think they'll be aggressive, and I don't think it's going to work very successfully at all.
Right, Peter. Tell us, what's your overall take on the commodity space? Which commodity do you feel stands out for the rest of the year?
Well, if you were asking me this time last week, I would have said gold and silver. They've given back a fair bit of that hot air in the last 3 or 4 sessions, 3 sessions. And the US dollar has strengthened dramatically, but we had that very strong non-farm payroll on Friday. So I still believe that there's upside for precious metals. And I think that 23 will be a stellar year for them, both physical and paper. But a lot of retail traders are certainly looking at hoarding more physical, gold and silver.
Well, gold and silver looking attractive for the rest of the year. Lastly, I want to get in your take on oil prices. Brent is hovering around that $81 mark. Yes. Where do you expect crude prices to settle over the next 6 months or thereabouts?
Well, again, after we've seen that big washout over the last, say, 5 to 7 sessions, where we were nearly touching 90, now we're touching 80 for Brent. I still believe that oil prices will edge up higher from here. The US dollar is a big concern, but I think energy prices will be higher than lower in the foreseeable future. So there's another concern. And that's why the aluminium situation with Mr. Putin, they've got to be very careful on that.
Peter, also want to get in your thoughts on the Fed rate trajectory. Last time we saw a 25 basis point rate hike. Would you expect the Fed to pause in the next policy meet, or would you expect another 25 basis point hike before they look at a pause?
Well, we've got to see. There's a fair bit of water that's got to pass under the bridge. With full employment, we're at record levels as far as a record low back to 1969, 53 years as far as unemployment. So that's very, very strong. And the overall theme is inflation under control? Bank of England and the ECB both raised 50 basis points towards the tail end of last week. So I'm erring on the side that there's still another 25 out there. And I think that we've got to be probably a little bit more aggressive as far as curtailing or pulling back that inflation. So, yeah, I'm not going to be surprised if you see another 25.
Right, Peter, it was great talking to you. Thanks a lot for taking out time this morning.
Thank you very much and take care.